All right, Hertz. It actually hurts. So we're gonna look at Hertz from a three perspective: the good, the bad, and the current situation, which is really, really ugly. One of my most favorite, all-time favorite Western movie with Clint Eastwood. So I just picked that up. Let's talk about the history, which was good from Hertz. To understand the history, we have to go back all the way to 1918 when Walter Jacobs had a great idea. Cars were just appearing on scenes of America, and he had an idea in terms of how we can have a lot more people experience the luxury of a car. Those people, they cannot afford to buy a car, but how can they still use a car? And he wanted to provide the experience of car at a fraction of cost of ownership. So Hertz was born. So it was founded in 1918 with 12 Model T cars. That's how the journey of Hertz started. And I think it's been phenomenal journey from then until last few decades when it started to decay. So also Hertz set up the rental car offices in airlines because a lot more people started to travel. Air travel became more and more common, and then people had a need. Once they land on the airport, they had a need for a local transportation, local commute. Hertz was just at the right place. So no wonder that Hertz was the number one undisputed leader in rental car business for decades. So much so that their competitors, they already gave up that Hertz is one, we can't be number one. So Avis car rental, their ad was, hey, we are number two in rental business. But they understood there is no point in fighting number one. So they felt proud to say, hey, we are second number just behind Hertz. So that's the amount of, I would say, from a business perspective, that's how strong their business was. Right? So what went wrong? Let's look at the bad part. And that's where the debt comes into picture. And as we all know, debt from a at a at a personal level, the debt that we have is our credit cards, and at a corporate level, there are different levels of debts. It's great when we can make use of credit card, get some some money for some period free of charge, and even if we have to pay it, we do get some money when we need it. But when the times go tough, that really starts to bite us. Corporates are no different. So Hertz started loading up on that because the private equity, a consortium of private equity, they wanted to buy Hertz because they thought we can take over Hertz, create more value out of it, sell it back in the market, or take it back, in IPO in market and make money. So in 2005, a consortium of private equity companies, they snagged Hertz. But they did not have money, so they had to raise $4 billion. They took on a debt of $4 billion to acquire Hertz, and that $4 billion stayed on the books or on the accounts of Hertz. So now Hertz has got a $4 billion of debt on its books. Means that they have an obligation, they have a liability which they should pay down slowly and steadily. But no, that didn't happen. Hertz wanted to expand into a different line because they were getting a lot more competition from Expedia, Travelocity, which were giving a lot more choices to cost-conscious customers. They were able to provide rental cars at much cheaper rates. So the Hertz really wanted to move into an area. It was always considered as top of the line. So they were losing the customers, those who were more cost conscious. So Hertz had to do something. They wanted to buy Thrifty. Again, they didn't have money. They already had $4 billion of debt, and they wanted to buy it at $1.3 billion. Got into a bidding war with Avis, raised the price to $2.3 billion, and then financed it with $2 billion of debt. So they had a debt, they took on more debt. And I just don't blame, the Hertz finance team for it, because this is a time when the debt was dirt cheap. Fed interest rates were historic low. And as a CFO, as a finance person, if I am not making use of debt to shore up my operations, or not making use of debt to invest in business when the debt is available so cheap, that really doesn't good look on my books. Every other CFO was doing it. The economy was turning back after 2009 2010 crisis. The economy had to started to turn back. There was a growth, and in terms of growth, and when you expect that you can get a lot more revenue, you can increase your revenue at a higher percent than the cost of the debt. Why not make use of that? And that's the logic. Not just this company, a lot of other companies took debt, and this is a similar story I'm seeing in many other bankruptcies also. But long story short, they took more debt. It's okay. The debt is so cheap. We can continue to function as a great, we can increase the revenue. We can get a completely new segment of customers, and then we can pay off this debt. And not only that, they took on a lot more debt because their whole fleet, their cars were aging, and they had a need to replace the car. And now this is where their ugly part starts. So to compete with a lot of other companies, and by this time enterprise rent-a-car already had taken #1 slot. So Hertz was relegated to #2 spot. Now they wanted to replace their fleet. They need new cars. That means they need more money. They already got $6 billion of debt on their books. So they were to really find out who else can finance them. No lender were willing to give them more debt without having any collaterals. So what they did, and Wall Street is always great in coming up with these complex instruments, which most of the general public doesn't understand, but I think many people even in the companies won't understand. So they came up with a new asset backed security bonds, and they sold those bonds to investors. Now those bonds were secured with the fleet of cars they own. It's equivalent to what we have seen in 2008, wherein those mortgage-based bonds that were secured with the prices of the houses, and those bonds were sold. They were rated and then sold to investors throughout the world, because at that point of time, nobody thought that the house prices will ever go down. And when the house prices went down, all those investments turned sour. Many banks, those who have bought those bonds, went belly up. And anyway, similar stuff, asset-backed security bonds, which were backed by the fleet of car that Hertz will own. And not only that, Hertz even went a step forward, signed in blood that if at any time the value of the cars go down, Hertz as a company will make up the difference. So now for me, as an investor, as a buyer of that bond, this is a no-risk deal. First, I got an asset which is backing the bond, but the only risk in that asset is what if the asset value goes down. Now Hertz has already pledged as a part of this agreement that if the value of the cars go down, they will make up for the difference. So because of this strong covenant in this bond, These bonds were rated triple A, which is as safe, as secure as treasury bonds offered by United States Treasury. So super secure. And then when the Wall Street and the Hertz created these bonds, they sold it off to investors, and they raised $14 billion. 6 billion that they already had were not enough. Now they raise another $14 billion by selling these bonds. I see a question, Hertz down due to COVID. We'll talk about it, what brought Hertz down. So more debt. Now the problems will start. The problem started when in April 2020, 3 months ago, the value of the fleet, because those are the cars that are being used, those are the rental cars. There is a market for selling rental cars. Everyone knows how those, what's the price at which those cars are being sold. The value of the fleet that Hertz has decreased by 12%. Now the covenant that they signed in blood, those bondholders coming up to Hertz saying, make up for the difference. You signed up, you told us that you'll make up for the difference if the valued fleet goes down. The difference was $500 million. Hertz did not have the money to pay up for that difference. There was no way they could raise their equity because the market, in April, there's no more new IPOs coming along in April, so there's no they could not have approached the equity market. Their debt level on their books was already so high that they could not have raised more debt, and they needed $500 million, which they did not have on their books. So what Hertz had to do, they had no option but to declare bankruptcy. So they tried to negotiate with those bondholders, saying, give us 60 days, we'll give you more money, but bondholders didn't budge. They saw the writing on the wall, like it's not going to survive. They're just not doing the operations correctly. Their whole merger with Thrifty really didn't go well, and there was no synergy that they could exploit from them. So Hertz had no option but they declared bankruptcy in April, and the share went to 50 cents. So that's what killed Hertz. It was not because of COVID. It was COVID, I would say, has hastened the death of Hertz, but it was because they had so much debt on their balance sheet, and when they had to come up with that shortfall, they just couldn't come up with that money. Again, so these debt look great if the company is growing, but when the cycle turns around, it really cuts and kills really hard. We have seen it with JCPenney, same story, private equity loading them with the debt to increase the inventory to do a lot more stuff. Everything looks good while the going was good. Once the economy turned, JCPenney went out of favor, just got killed. So nothing new. We have seen this story multiple times, but the Hertz has been so much in news lately that I thought it will be good for us to get into the history and just try to understand what's behind the chart. The stock chart doesn't tell the correct value. So we need to get behind the chart and see what's happened, what has happened. So few headlines that have come up last week, which I saw was Robinhood traders, they're piling up Hertz shares, tons of shares. And on Friday, the Hertz are requested to raise $1 billion through equity financing. And the reason is because the debt is super expensive. No one is willing to give them more money. And so what they are thinking is, if that's the case, why not just raise more money? Because there is craziness in the market. People have been bidding up and buying Hertz shares, which could eventually go to zero, but they brought those shares up from 50 cents to $5. Let's sell some more dope to them. And that's what Hertz has been planning and asking to do that. And it's a purely speculative play at this point of time. So this is what the Robinhood, if you really look at, focus on this side, we have seen as the share price has gone down, the number of users holding Hertz shares, and this is data coming from Robinhood, has really gone up. Mind-boggling. And if this is not exuberance, I don't know what it is. Again, bankrupt Hertz can tap market frenzy to sell potentially worthless stock. It is not illegal. Now the question is, if this is the case, why is judge allowing them to sell these shares? Right? The judgment came on Friday. The bankruptcy judge says, okay, if you want to do it, go ahead and do it. No, I can't recall of any other company doing it. But Hertz lawyers say it's not illegal. SEC says that as long as you disclose all the risk, market is aware of the risk, it's not illegal to sell your shares. But what Hertz want to do is to just tap the euphoria in the market to sell these worthless shares to those unsuspecting traders, users who have been bidding up prices for Hertz. Last line I want to read about it is coming from a professor at University of California, Hastings College of Law. It looks at the market, and this all they decided, Thursday, Friday. I'm sure they started looking at this as an opportunity when the share price went up all the way to $5. But this is not a normal route. This is not a normal way if company that's going through bankruptcy process wants to raise funds. But what happened with Hertz stock is not a normal situation also. So they started looking at it and they saw there's a group of irrational traders who are buying the stock. So why not sell the stocks to them and get the money? And that money they can then use to either, basically fix the company. But how much do the bond holders, do those institutional investors that have invested in bonds think that Hertz could actually turn around? The probability is very less. In the market today, the bonds of Hertz for 2020 are trading at 40 cents. Those $1 bonds are now trading at 40 cents. So number two, if those who will buy these shares, they are last in the queue for getting any money back from the company. Even if company survives, when they have to pay down to their debt holders, when they have to pay off their liabilities, the shareholders, equity holders are last in the queue. First of all, they need to pay those bond holders to those lenders that have lent the money. So very, very speculative. That does not mean that there are some company lawyers and the finance people who will try to take advantage of those speculators. And that's what exactly is Hertz trying to do. It's not illegal. Is it immoral? Maybe borderline, but who cares about morality? So if you thought that Hertz has gone so high, now it has fallen down, maybe, I don't know, it's $2, $3, could go further high because of this new IPO news, I would request you to trade with really, really caution. I won't touch this, with a 10-foot pole. But yeah, you can make your own decision. But I just wanted to share in terms of what's been happening with Hertz.